Hey everyone, and welcome to today's Explainer. We're tackling a topic today that is probably going to impact nearly every single homeowner at some point, yet there is just a massive amount of confusion surrounding it. We're going to break down the ultimate homeowner's blueprint to insurance roof claims. We've got some fantastic visual breakdowns to make it all crystal clear, but first, let's set the scene, all right? Imagine waking up in the middle of the night to an absolute nightmare. Okay, let's dive right into this. It's 2 a.m. A violent storm is just raging outside, hitting your neighborhood hard. You wake up, step out of bed, and squish. Your foot lands smack in a puddle. You look up, and water is actively dripping from your ceiling. Yep, your roof is leaking. Now, in that panicked moment, your first thought is usually pretty comforting. It's fine, my homeowner's insurance is going to pay for this. But what if I told you that's not always true? That automatic assumption is actually a pretty dangerous one. And honestly, it's a super costly mistake thousands of homeowners make every single year. So, to really understand how to protect yourself and your wallet, we've got to start by shattering a major illusion. Section 1, the big insurance myth. Is every leak actually covered? So the core of the issue here is this huge myth. People tend to think having an insurance policy acts as this giant blanket warranty for their home. They think, well, a leak's a leak, right? Just cut me a check. But the reality? Sometimes yes, sometimes no. Insurance absolutely does not automatically cover every single drop of water that finds its way into your home. There are incredibly strict rules governing exactly what triggers a payout, and knowing these rules, that's literally the difference between getting a massive repair covered or having to completely drain your savings account. And that brings us to the golden rule of the insurance world. Listen, if you take away only one thing from this entire explainer, let it be this definition: sudden and accidental. Insurance is designed specifically to cover unexpected, abrupt damage. Think of it as a safety net for the totally unpredictable. What it's absolutely not designed for is deterioration from age, neglect, or just a lack of basic maintenance. Think of it this way: your insurance policy is not a home maintenance plan. If your roof fails simply because, well, it's 25 years old and the shingles are crumbling to dust, that's not sudden. That's just inevitable. Moving on to Section 2, when your policy actually pays. So what does fit the bill? Here's a clear list of typically covered events. These all perfectly fit that sudden and accidental definition we just talked about. We're talking about severe windstorms, physically ripping shingles completely off your roof. We're talking large hail striking and denting the surface, fire damage, or a direct lightning strike. And of course, there's the classic scenario: a massive tree in your yard suddenly crashing right through your roof during a gale. These are the abrupt, totally unpredictable disasters where your insurance company will usually step up and cover the repairs. And this brilliantly illustrates the ripple effect of a covered claim. You see, if that roof leak was caused by one of those sudden events, say that falling tree, the insurance doesn't just stop at patching the giant hole in your roof. The insurance will typically pay for the resulting water damage inside your house too. We're talking ceiling repairs, fixing the ruined drywall, replacing warped flooring, and even compensating you for ruined furniture and fried electronics. Basically, if the initial cause is covered, the resulting interior chaos is usually covered too. Which brings us to Section 3, the tough part: why claims get denied. Now, what's really interesting about this slide is how it directly contrasts those sudden disasters with the slow, preventable issues. Just look at the right column. These are your common denial reasons: wear and tear, poor maintenance, an aging roof, long-term leaks that you kind of just ignored, or mold that grew over months of neglect. You see, insurance companies expect you to maintain your property. If you let missing shingles sit unrepaired for 3 years and then a regular old rainstorm causes a leak, the insurance adjuster is going to spot that neglect immediately, and they will almost certainly deny the claim. Let's actually bring this to life with a real-world comparison. Picture two neighbors. A heavy rainstorm hits both of their houses on the exact same nights, and they both wake up to leaking roofs. Homeowner A gets a check from their insurance company. Why? Because an adjuster came out and saw that violent wind from the storm had freshly torn off perfectly good shingles. Sudden and accidental, right? But homeowner B, they get a denial letter. Why? Because the adjuster got up on the roof and saw that it had been deteriorating for years before the storm even hit. The rain didn't actually cause the damage. It just finally pushed through a roof that was already failing. So let's say you're like homeowner A. You did everything right, your claim is approved. Time to celebrate, right? Well, yes, but we really have to talk about the financial reality of an approved claim. Section 4, hidden costs and deductibles. This is what we like to call the deductible surprise, and man, it catches so many homeowners off guard. An approval isn't a totally free pass. Even when your insurance company agrees to cover the damage completely, you are still financially obligated to pay your deductible first. That's the amount you agreed to pay out of pocket when you originally signed your insurance policy. Let's look at a concrete number to make this visceral. $8,000. Let's say a major windstorm severely damages your roof, and a roofing contractor quotes you an $8,000 repair bill. It's a covered event. Great! But how does that money actually change hands? So, here is the exact math breakdown. Let's assume you have a $1,000 deductible on your policy. Out of that total $8,000 repair bill, you, the homeowner, have to pay that first $1,000 straight out of your own pocket. The insurance company then steps in and pays the remaining $7,000 directly to the contractor. So while insurance is absolutely saving you thousands of dollars, you still need to have that deductible amount liquid and available for emergencies. Okay, let's move to and see how this builds into some highly actionable preventive advice. How do you make sure you're the homeowner who gets to check and not the denial letter? Section 5. Getting your claim approved. Let's improve your chances. Take a look at this checklist. These are 5 absolutely crucial tips to heavily improve your chances of a claim approval. First, inspect your roof regularly. Second, if you spot missing shingles, repair them immediately. Literally, do not wait for the rain to expose the hole. Third, take photos of your roof after storms. This gives you a real visual timestamp proving the damage was, you guessed it, sudden. Fourth, report damage to your insurance quickly. Waiting months just makes it look like a slow, neglected leak. And finally, keep your maintenance records. Having receipts from minor roof repairs proves to the adjuster that you've been actively taking care of your home. You're basically providing hard evidence against their wear and tear argument. So to wrap this all up, will insurance pay for your leaking roof? Well, the ultimate answer entirely depends on what caused the leak in the first place. If it was sudden, accidental, and from a covered event, you're likely protected. If it's from age and poor maintenance, yeah, you're likely on your own. I want to leave you with this to think about. Have you ever actually filed a roof damage claim before? And looking at your house right now, today, is your roof truly ready for the next storm? Think about it, check your shingles, and ensure you aren't leaving your biggest asset completely unprotected. Thank you so much for joining me for this explainer, and I'll see you next time.